Joining us is going to be the CDO, Reserve Bank Innovation Hub, Rakesh Ranjan. Let's give our man a big, big round of applause. Deputy Managing Director, IT, State Bank of India, Global IT Center, Srimati Vidya Krishnan. Co-founder, M2P Fintech, Mr. Madhusudanan R. Let's give a big, big round of applause. Partner, Omidyar Network India, Mr. Siddharth Nautiyal. And also joining us for the opening, and we'd love to have him. He's not going to be joining for the opening right now. Oh, closing now. Interesting. Opening or closing, as long as he's there. So can we have a big, big round of applause to all our panelists, and maybe request you to please be seated, and let's begin with this discussion. So, Mayank, in your able hands, let's take it forth.
Thank you very much, and it's a pleasure to be here. This is a very interesting topic. We are looking at a lot of classes of fintechs that we have spoken about, and there is a silent revolution which is happening, where fintechs are collaborating with banks and NBFCs and the insurers and the asset managers and likes to create new opportunities of business. And as a result of it, what is happening in the country is that India has leapfrogged in terms of its evolution by about 47 years. Now, that's the study which indicates that if you look at how banking penetration happened in countries, it goes in line with the GDP evolution of countries. So if traditionally we would have waited for that sort of a banking penetration, it would have taken us 47 more years than where we are today. And that has been enabled by a lot of technology transformation that we all know. But what's unique about India? I mean, we have heard about technology transformation. It's nothing new to India. It is happening globally. The technology transformation in India has leapfrogged the nation to being data rich. It has leapfrogged the nation to be able to make sense of all the information. It has led to a much stronger interconnected ecosystem. So the kind of impact that the technology cost reduction and technology deepening that has happened in the country has created a much larger at-scale effect compared to any other country in the world. So we have seen growth in any metric that we look at: online banking, UPI transactions, outstanding credit for India. These numbers have grown by astronomical amounts. This is the extent of deepening that has happened in the country. And for deepening, it is very important that the incumbents in the financial services sector continue to play an important role, because they are the trusted aids that the country has seen. But the innovation is brought in by the fintechs. The question is how they come together to make this work. And that's the part of the story that we want to talk about with the panel today. We have a very esteemed panel. Mr. Rakesh Ranjan is the CDO of RB Innovation Hub. Ms. Vidya Krishnan, who leads the entire technology transformation at State Bank of India. Madhu, who has been one of those fintechs who has worked in collaboration with the banks to make them access new markets at lower costs with the innovative infrastructure that he's bringing together. And Siddharth, who is looking at opportunities in this space and identifying the right set of people and helping them grow in this space. So that, with that, I also want to call in Amol from Omidyar Network, who is the director at Omidyar Network, to share on what we are seeing in this financial infra-tech space and what does the space really mean.
Sure. Thanks, Mayank. So a large part of the transformation that Mayank spoke about has been steered by the financial institutions who have embraced technology, who have embraced digital innovation. But the unsung heroes of this story are also the B2B infratech players, or the financial infratechs, or FITs as we call them, who help these financial institutions innovate. Now, if you look at this slide, the FITs work with financial institutions to do a host of things, to provide consumer insights, to improve efficiencies, and a lot many other things. They also work across the value chain, right, from sourcing customers, onboarding, underwriting, collections, reporting, and so on. If you look at this sector today, the FIT sector, as we call it, or the segment, attracts roughly around 30% of the capital that flows to the fintech segment in India. And we estimate roughly there are around 450 odd FITs in India at this point of time. To dwell deeper into this exciting segment, I'll hand over to Mayank to lead the panel discussion. Thank you.
So, so there is a very interesting teaser about the study, which is available, and you can check it out. There is a QR code that we'll share towards the end, which you can look at to get a preview of what the sector is looking like. But one of the things, when BCG has looked at the fintech space overall, I think this opportunity is just emerging. We are still behind global peers when it comes to fintech investments in these B2B sort of companies. India is still at about 49% B2B funding. Of the total pie of the funding, 49% go to B2B players. Globally, that number is 71%. So we are about 20 percentage points shorter in terms of the opportunity that we look at in this space. So let me kick off this discussion on this topic with you, Rakesh. What is the financial infratech opportunity that you have seen from an innovation point of view? How have you seen it driving the innovation and inclusion agenda in the country?
Sure. Thank you, Mayank. Thank you for having me here. So to start with, I agree with every word that you said in opening remark, Mayank, that India has really made huge, stellar like progress in the field of financial infratech, and which is enabling the businesses. It has changed the way businesses do business, right? You can see how they integrate with each other, how their digital services are being consumed across various services, use cases. And that really creates a platform for a future scale-up. And I agree with Mayank when he said that we are still behind, the curve, and there's still a huge scope for further improvement, investment, and scale-up, right? Now, having said that, now if you look at where we are, we have I would say a humongous, I would say availability of data, the services, platforms already in the system, right? And then supported by the India stack, the DPIs that we hear about, the DigiLocker, and plenty of other such services. And even the entities like the financial sector, like the banks, NBFCs, the fintechs, they also have their own platform services. Now, in my opinion, there's a need for convergence, right? Data is lying everywhere. Services are lying everywhere. Can we converge? Can we create some kind of common platform which can be consumed, which can be, allowed to share, relevant information? I'm not saying PII, but relevant information for, further improvement of services, right? Is that possible? And if you look at the way we worked just 10 years ago, it was like every entity was doing everything by themselves, right? Developing services end to end, starting from creating the application to a backend platform, analytical engine, everything, right? But now with these, the financial infratech, what Mayank referred to, that is shortening your time to market. You can go live in a very short time. You can consume they don't own the customers themselves, right? These financial infratech, they don't own the customers themselves, but they enable the entities to get immediate access to a large market, right? I'll just cover a few examples soon, which is actually reducing the cost of sales and marketing also for the entities. Can you imagine a fintech getting access to, say, 10 banks in 1 year? I would say it's really impossible. At least 10 banks also is impossible. Sorry. But with these kind of fin infratech that Mayank referred, it is clearly possible, right? I'll give an example what RBI Hub and RBI have together done. So we are leveraging the digital activity that happened in India so far in the various fields, right? We are building upon that. So the idea is to enable credit for another 500 million Indians, right? In a frictionless manner. With this objective in mind, we started with exploring what the Kisan credit card scheme looks like, okay? Our observation is that the farmers get credit with a lot of difficulty, right? It takes 4 to 6 weeks minimum to get even a loan as low as say 1 lakh, right? The out-of-pocket expenses, and thirdly and the most importantly, the documentation requirement. A lot of bankers would agree here that it's a big pain, right? Both for the borrower and for the bank itself, right? To capture documents, verify them, and then store them for future reference, right? So we mapped out the KCC scheme and we found there are 9 steps that are executed in the entire process. Is there a way we can automate each of the processes using the various systems already available? We didn't get anything new, already available. We found that the first step is eKYC. Okay, now a bank would say, hey, can you please submit an Aadhaar card, a copy of that, and we will verify you, first step. Second, they want the land record data. Go to the near Tehsil office, go to any government office nearby, get your revenue office, get your Khata certificate, Khasra document, give it to the bank. Then third step is to look at your CIC report, a CIBIL report or whatever, right? Then goes to BRE, scale of finance, and then signing of documents, and then the loan is disbursed. Now that takes around 4 to 6 weeks. And it's pretty expensive both for the borrower and for the banker as well. Using Aadhaar eKYC, using the land record data services of various state governments. So I'm talking about the existing digital infra in the system, right? Just by consuming the already existing system infra in the country, we could bring down the disbursal time from 4 to 6 weeks to few minutes. Now that's the advantage you can actually derive immediately by automating various pieces. And the digital infra actually will help. So now talking about the KCC, dairy loans, and there are many other MSME loans as a working capital for the MSMEs. So many applications of such digital infra which can be put into place. So I'm pretty sure that going forward, people start exploring how we can explore new services and unlock new data sets to make sure that digitalize the entire journey and make sure that it's a good experience for both borrower and for the bank as well. Thank you.
So, Rakesh, as you rightly said, these financial infratech players are already creating a lot of value in the industry. Just to the example, and maybe I'll quote one more. 5 years back, an average savings bank account opening cost to a bank would be anything between 2,000 and 4,000 rupees. This cost has now come down to anything between 1,000 and 2,000 rupees. Because of all the validations that you can do online, more accounts that you can open because of digital pipes being created. What does that really mean? It means that the minimum account balance that you need for an account to be viable for you suddenly comes down to half. If you wanted 30,000 rupees for this account to make sense for your bank, it is now down to 15,000 rupees. Right? Which means, I don't have a challenge in opening more accounts. I don't worry about, whether my cost of opening an account is exceeding what I'm going to make from that account. So this is clearly linked to also better inclusion in the country. And let me move to Vidya ma'am on this. Ma'am, SBI is the front runner of creating large-scale change in India. We talk in a lot of context. If it can happen in SBI, that means actually India will move ahead. And you have led technology transformation in the bank. How have you seen these financial infratech partnerships benefiting you and benefiting the bank? And I have a second question, maybe just as a follow-up to this as well. Are there opportunities that you see which are like KYC as an opportunity is very mature now? Like every bank pretty much uses. Are there opportunities that you're seeing that there are white spaces and you're looking for a solution, but right now they don't exist in the market? Yeah.
Sure. Thank you, Mayank. First of all, thank you for having us here. Yes, you did start by saying that there is a, the kind of contributions that infratechs, fintechs can actually make to banks. We've already witnessed that because we've been engaging with a lot of fintechs. Onboarding is just the beginning. And there itself, we've seen the kind of innovations in experience, onboarding experience that nimble fintechs can actually bring onto the table. So they are able to adopt latest technologies much faster and also create different kind of solutions that appeal to even the younger generation, which I think is welcome and really helps in increasing our penetration, especially to the new to bank customers, not just new to SBI, new to bank customers. Beyond onboarding, it's actually the whole lifetime banking of our customers, where fintechs could actually come in, whether it is at the point of deposit taking, through B2C kind of structures or B2B, as well as on the credit front, as well as payments. And we are seeing that both the government of India as well as the regulators are creating those kind of enabling environments where these fintechs can actually thrive and also add value to banks. So, so in short, it is the agility of fintechs plus the ability of banks to actually reach out to the less served, underserved, which we believe is the a magic recipe. And collaboration is the key. And it's collaboration that can actually bring in the kind of symbiotic end results that we could see, which could help inclusion and economic growth. But while saying that, we would like, you spoke about SBI and the kind of impact that it can make. Fintech certainly can contribute, and with our bank, the cost efficiencies, process efficiencies could be far more evident than anywhere else. And that's exactly what we are seeking. And going forward, we are also on a transformation path. We are embarking on the next version of YONO, that is YONO 2.0, which will bring in a lot of personalized services, which requires analytics, new kinds of models. So this is a space that we see growing, and this is exactly where we would like to engage more with young partners. And for that, we've taken that first step. We've created the SBI API Hub, and we invite many of the fintechs to actually come and experiment, where we'll be putting our APIs. So we would like to not just have you create, but we would like to co-create. This is more of a co-creation exercise where we could engage, and we will, the kind of APIs that we have at this point in time or what our partners would require, we are happy to offer all that in this hub. Not only that, we would like to collaborate with several, other such partners. We already have with STPI or with Apex, etc., where we can create a lot more vibrancy, and also we look forward to many new solutions which could come from fintechs, which could help our product offerings as well as the experience that we offer to our customers.
Madhu, let me move to you. There is clearly a demand, right? Banks want to do it. They want to get to more customers. They want more efficiency for themselves. Now you have been on the other side, trying to collaborate with the banks and get this message across. And navigating banks isn't easy. What has your experience been? You have been on this journey. What have some of the success factors of this collaboration been? And where have you seen challenges?
Sure. So Mayank, thank you. And in the way we have seen, we are a 9-year-old business. So we evolved and come to a point where the relationship with the bank has actually matured over the last few years. When we started out, we looked at banks as a regulatory supply side, where if the bank can sort of rent their license, I'm just using very colloquially how we would look at it, we would partner up with somebody as a fintech and sort of take that product to the market, right? So it's a very transactional relationship in that sense. But over a period of time, we realized, and it's also because of 3 factors that played out, at a macro level. One was a very foundational aspect around what banking business itself is, which is 6 or 7 years ago, banking business was relegated to what the banking hours were, right? Today, there's an IPL game, there is someone like a Swiggy launching a campaign, the CDO loses his sleep, right? Because you don't know what scale it's going to hit, whether the capacity is there or not. So the banking business has moved to an internet scale business, right? That's a very important aspect because now it's not by your choice, but by design you need to have platforms that are scalable, that you can actually accelerate based on what the external world demands are sort of coming in from, right? So there's a macro factor and a macro push that's actually forcing in some ways everybody to become more efficient and so on and so forth. So that's one aspect. The second is in terms of the relationship between the fintech and the bank. We have seen an acceleration in innovation cycles that can happen with the bank. Right? For instance, 6 or 7 years ago, we would have, after some product has scaled in the market, a bank would come and say, we like this product. Is there a way by which we can offer, a product like that, right? Today we have 2.0 that is competing with the best of fintech that's going to be out there. By far the largest neobank is from maybe globally as well, right? So therefore, that innovation cycle crunching is a reality, right? It's no longer relegated to tech-first companies. Yes, the ideas get incubated there. Some of these ideas may look really good, but may not actually scale from a usability and what the user would want. So therefore, whatever ideas that work, a PFM is a great example of what you can do with a neobank, where thanks to the account again, going back to what public good infrastructure actually provided, you could actually give a unified view to a customer of what their financial health is looking like, right? Something a Yono 2.0 or any other Kotak 811 could do as much as what a fintech offering can actually do, right? So therefore, in the eyes of the customer, what is the store of trust? Naturally, it will gravitate towards a bank offering that platform capability over a new company that is offering it. So that's a very significant change that we are noticing. As a byproduct of these two, we have a situation where we need to figure out ways by which we can partner up with the bank in a more efficient manner, which goes back to how tech procurement happens in banks. Right? Today, not by design, but by the fact that typically most banks would have dozens of tech platforms because many of them are taken in product silos. UPI came 5-6 years back. Every bank did an RFP to select 1 or 2 providers to actually work with them. So if there are 20 different products, there are 20 different potentially tech stacks. And when you have an internet scale problem, not all of them will actually scale collectively, right? So you might have one platform that will scale. Somewhere, because of the legacy product that is out there, it doesn't scale. So you now have a situation where you don't have a choice but to start looking at how do these platforms come together, right? Is there a more efficient way to run this technology? And by that design, you'll have to then start looking at, are there partners where you can partner up and SaaS type offering, rather than me spending a ton of money in CapEx, is there a way by which we can meaningfully test and learn? If that doesn't scale, if I don't incur a lot of CapEx, then I can just shut it down at some point and say that let me move on to the next idea, right? So where we see as players, what we see as value is the fact that even though India is one of the lowest from a spends on tech as far as banking, so some reports suggested that Indian banks spends about 150 basis points on their top line on tech, vis-a-vis a global average of close to 400 basis points, right? So we are still very efficient in the way banks, sort of consume technology. But if you can take out the cost equation where, the cost of innovation doesn't cost much as long as, you can prove that product. I think we have a winner in terms of how those partnerships can actually become very symbiotic and can scale as well, right? So we see that appetite from banks, going up by the day, and we are also pleasantly surprised with the openness with which, you're looking at almost like the cloud moment in banking, right? When I say cloud moment, it's not from an infrastructure sense, but 15 years back, if you're running a technology business, you will buy hardware, you will assemble a team, you will run a data center. Today, nobody thinks of it, right? A lot of the fintech or in fact technology founders would have never in their life seen a data center. But the reality of it is that banks still run a lot of that tech in-house because what I just articulated about different tech platforms coming together and all that. So we have a chance to actually reset that. And in many ways, India is actually leading the trail because in the external world, this macro pressure is not there of some RTP product scaling, UPI-like product scaling, or an account aggregator sort of, so the policymaker is now saying that this is how we have to sort of chart that path. So therefore, we are lucky to be in a point where like companies like us, we can build and make India the fintech factory for the world, where a lot of the ideas that scale, because you can count, the number of countries that have, population of a scale of some of the large banks in India. Right? So yeah, that's.
Oh, completely agree. I think looking at 450 plus financial infratech players only, attracting about 1/3 of the funding that has come into the country itself is indicating the potential of innovation here. Also, a lot of fintechs come from a tech first and fin later kind of a background, right? That's what they have seen. So, and banking is a very different game. It's a very regulated industry. It's a business of risk ultimately. So, and maybe a follow-up question to Vidya ma'am. What do you look for when you're looking at financial infratech partners? What do you look for in them when you think about partnering with them? Because he also spoke about, Madhu also spoke about the long procurement process, and it's beyond procurement. It's what do you look for in your partners?
What we look for is a solution that's scalable. So it should not just be a POC scale. And the kind of scales that State Bank of India operates is overwhelming. So that is the first thing. The second thing, you very rightly pointed out that banking is a regulatory business, and therefore there must be an alignment. So the risks, especially the risks that the banks could face, the systemic risks to the economy. We would like to partner with fintechs who understand the premise and are able to actually work to ensure that the solutions are also safe and secure. I think these are the only two things that we feel are very necessary, and we are very happy to go that extra mile and help our partners create the kind of, help them create the kind of security strictures that would be required as part of the solution.
And would the banks be open to nurture them along?
Absolutely. So one of the features in our API hub is also the hand-holding that will be given by the information security team, enabling the whole onboarding exercise to be at least easy from this point of view. So we are very happy to do that.
Interesting. So that you come from a different lens of looking at this industry and spotting opportunities, which help the impact agenda. What do you like about this space? What interests you here?
Thanks, man. Thanks for the full toss. This is, we've heard we've experienced the change that's happened in the last 8-9 years. We've done the 47 years of exhibition in years. But I think also we've just about begun. I think more than half of our work is still left. And some data will illustrate. So if you look at MSME credit, we've seen massive growth, but still 30% of demand only for MSME credit is is currently fulfilled. If you look at access to credit for farmers, we spoke, Rajesh mentioned about how the cost of servicing a farmer, a credit application, is maybe 4 to 6,000 rupees in 4 to 6 weeks. That limits how many people can access credit, which means that only 41% of farmers today have access to credit, to small and marginal farmers have access to credit, which is a big thing. That is a big part of the development agenda that we're not covering yet. How do we solve for that? 50% of India's population is still unserved, 20% is unserved, which means they only have access to one credit solution. Only 40 million people in India have access to any form of transaction credit. If you look at the scale of what India can offer, where we are right now, we just was scratching the surface. The good news is we have, and as we've heard from Vidya ma'am, we have incumbents whose job finally it will be to make sure we solve this problem, because that's where the muscle, the regulatory muscle lies. We've got incumbents who are very welcoming of players working with them. But we also need to have innovation from the structure, from the sector across the board, which is where the FIT is coming in. Because to be able to innovate new products for customers whom the traditional banking infrastructure hasn't really served so far, to serve them in a more cost-effective manner, to design new products for them. I think all of that is where the FIDs will come. And some data will illustrate that. So if I look at an example of a company called SatShop, which is a bunch of space scientists who came out of ISRO to set up a satellite-based data imaging and analysis company. Now they work with banks to help cut down the cost of credit evaluation and measures. If you can do that, suddenly instead of ₹1,00,000 as a minimum loan, you can offer a 30,000 rupee loan to a customer, and you can expand the access to credit. Madhu, I think, has been very modest about how he and M2P have been at the forefront of change in the last decade in India. Over the last year, M2P has served 35 to 40 million customers by connecting banks to fintech players. I think it's these sort of changes that we are very excited about. We have a decade plus of road ahead of us. We have a lot of catching up to do. We're starting from a base which I think is behind many other economies. The good part is that we have now the infrastructure and the willingness of folks willing to work towards this. Hopefully, we'll have many more success stories to share over the next year.
Okay, and maybe, one final question. This is a common question to all the panelists. What are some of the aspects, and what are some of your thoughts in terms of ensuring a sustainable growth in this segment, which will happen as a result of collaboration? But maybe what is that one thought that is needed to ensure that the financial infratech opportunity goes to a sustainable growth and it's rightly leveraged in the country, both by the infratech players as well as by the incumbents. So, in any order. Yes.
So this is a personal opinion, and in no way I am echoing, say, RBI's opinion on this, but definitely I believe that there should be a lot of, so already the sovereign is already, working towards developing many such infrastructures, right? But a lot of work still needs to be done. I'm sure if they tried the initiatives to create more and more DPIs, correct? The private sector can actually come and join those DPIs and start, creating valuable services, value-adding services around those DPIs, right? Because my personal opinion is that a lot of these private companies cannot invest as much as the government can do, right? So that's my, a short opinion on this, but yeah, we can discuss this in more detail.
So plugging into, looking at DPI as an opportunity,
Exactly.
plug in to drive more innovation, leave the DPI to the government to be created. Ma'am, what's your ask, or what's your suggestion?
The four of us have to be together. The regulator and the government, kind of enablers. Banks as large users that can actually go to their influence. The innovators and the financiers. If all of us come together, I'm sure it's the perfect recipe.
I have one, out of the box idea. most banks should, just as the way they have a CSR budget, they should have an innovation budget that they should spend, right? So that what happens is that we're often caught in a cycle where certain products you need to actually fit into a certain commercial structure that is working in the market. So you often don't get the chance to actually go beyond that, firewall that you have, right? So if there is a way for banks to seriously start thinking dollars behind innovation, it will actually start having meaningful impact, both on the inclusion side as well as what the bank can do top down in terms of how holistically the bank can start thinking about innovation, right? So some banks do it. I'm not saying none of them. So if there is like almost like a blanket saying 1% of your top line should go into 1% a large number, but maybe 0.1% of your budget should go into an innovation, pool. That actually could trigger a lot of innovation, because today I can go out and tell a bank that this is a new idea. I would just do it for you for free. We can run this as a POC for 6 months. But when we actually get to the end of that 6 month, road, we have to figure out, how do you make it commercially viable? Yeah. So I think a lot of that proof point don't exist because we never get to the end of that 6 months, because we are actually, straddling how do I make it work, right? So that I think is one request to the ecosystem.
That's a great thought. Siddharth, any thoughts from you on what your ask of the ecosystem?
Let's ask more about maintaining the path. I think the good part is we all realize that this is the way for us to increase financial inclusion. That's part of the national dialogue and agenda already. So long as we keep doing things that we already started doing and keep working towards that with clarity, we're on the right path.
Thank you so much. Well, ladies and gentlemen, let's give a big round of applause to all our esteemed panelists. And with that, we'd like to humbly thank our moderator as well. Let's give him a big round of applause. Thank you so much for joining us.